Dollar CAD daily forecast, January 9th, FXEmpire.com. The dollar Canadian dollar, as you can see here on the daily chart, has had 3 good days in a row. And in fact, the Friday day was daily candle was very bullish as we are ending the session at the very highs. Number of reasons for this, and number one would have been a poor Canadian jobs number. Not horrible, but poor. The oil markets fell, which oil, of course, is always attached to the demand for the Canadian dollar, and a good non-farm payroll jobs report out of the United States. So things are starting to favor the United States in a lot of different places. The dollar gained against the loonie as a result, and truthfully, the dollar gained against many other currencies. This chart isn't so much about Canadian weakness right now as it is about dollar strength. The 103 level below does look to be resistive, as does 104 at this peak here. And this is all predicated, the recent fall or strength gained in the Canadian dollar, it's predicated on the Iranian actions threatening to close the Straits of Hormuz in response to EU sanctions of Iranian oil. This shook the markets earlier in the week. As you can see, it fell. But the truth is, as time goes on, cooler heads are starting to prevail, and the logic of this is starting to come into play. The Iranians will not close the Straits of Hormuz. It's already been suggested by the U.S. Navy's Fifth Fleet that they are in the neighborhood and willing to intervene if something like that happens. And one has to think whether it would take 3 or 4 days to sink the Iranian Navy. Without the Navy, the Air Force would go next, and as a result, the Iranians certainly don't want to commit some type of sovereign suicide, as all they have to do is look at both their neighbors, who currently have different governments than they did just a few short years ago via the U.S. military. So the reality is that the Iranians simply are not going to do anything, and there's already back channel discussions that are fairly well known in the West that the mullahs in Iran are trying to get some type of conversation going about this situation. As the oil markets cool off, there should be demand for the dollar, and the fact that this pair grinds quite a bit leads us to believe that this is more of a buy on the pullbacks type situation, and just hang on. It's known to grind for a while and then spike up and then spike down and then grind and then spike again. Looking at even longer term charts, it can spike in somewhat super cycles in very short time and then go sideways for quite a while. So you have to be patient, as these two economies are very interconnected. But in the meantime, we are buying short term pullbacks.